डॉक्टर बाबासाहेब आंबेडकर ओपन युनिव्हर्सिटी.
Welcome to Dr. Babasaheb Ambedkar Open University for the subject of BBA Basics of Accounting. Friends, today we are going to discuss Block 2 Unit 3 Bank Reconciliation Statement. Friends, we know very well that accounting is a business language and cash is considered as a king in business. Transactions, journal entry, posting, trial balance and ultimately final accounts. During this process, in a subsidiary books, you were taught that we prepare one wonderful subsidiary book that is called cash book. Friends, generally in a cash book, you were taught 3 columnar cash book which consists cash column, bank column and discount column. So, friends, the cash book, bank column and the transactions recorded in a bank is written in a bank passbook. So, sometimes due to certain transactions there would be some differences in the balances of bank passbook as well as cash book. So, after certain period we have to find out the reason and we have to reconcile the balances as per bank passbook and as per cash book. So, the process of reconciliation is known as bank reconciliation statement. Friends, in this unit you will learn the meaning and objective of preparing bank reconciliation statement, the various causes of difference, the reason behind the difference, the methods of preparing bank reconciliation statement. So, friends, for any business firm, cash is very important. As I said, cash is considered as a king in business. For exercising greater control over cash, most of the business concerned prefer to operate a bank account. The bankers act as a custodian of the fund to be spent by business. Since the banker is the trustee of the customer, the bank provides to customer a passbook or bank statement on a regular or interval basis, which summarize payment as well as deposit and other charges for the period. To know the bank balance of a firm, it has a two sources of information. One is a bank column of cash book and the other is a bank statement. So, friends, as I said, in 2 columnar and 3 columnar cash book, generally we keep bank column along with cash. Two balances should be equal and opposite to the stated date. Friends, we know very well that whatever the balance as per cash book, the mirror image of this would be reflected in a passbook, bank passbook. But usually these two balances do not agree due to various reasons. These statements are prepared on monthly basis because the bank also provides the statement on monthly basis. So, generally we prepare bank reconciliation statement on monthly basis. Which are the reason causes behind the discrepancy or differences of these two balances? Balance as per bank statement do not agree with the bank balance as per the cash book of the firm. Few of the basic reasons for such differences are as follow. Friends, these reasons are very technical and due to this transactions reasons, generally there would be difference between two balances. Check issued but not presented for payment. So, friends, when we issue check immediately as per our 3 columnar cash book, generally in bank column we give the effect, but bank will consider it only when it is presented for the payment. So, check issued but not presented for payment would be the major reason for bank reconciliation. Checks paid into the bank but not yet credited. Sometime it happens that check is paid by bank, but still we have not recorded in the cash book bank column. Interest allowed by the bank. Of course, when interest is allowed by the bank at the end of the month, it is directly credited in passbook, which we do not know. So, when we check the passbook, we can make out that certain charges or certain transactions related to interest are directly recorded in a passbook. Interest and bank charges debited by bank. Sometimes it happens that bank charges for banking services are debited directly from the account, which bank immediately debit and give effect in the passbook, but we do not know. So, when we check the passbook, we can make out certain charges and interest or penalty if any charged by the bank would be recorded. Interest and dividend collected by the bank. Sometimes it happens that on behalf of us, if bank having standing instruction to collect dividend or to collect interest, so if it is directly credited to bank account, so that is also one of the reason for difference in balances. Direct payment by the bank. As I said that if standing instruction is given to the bank for direct payment, suppose insurance premium is paid on a monthly basis. So, if instruction is given directly, sometime it happens that certain installment of loan, ECS, electronic transfer, instruction is given to the bank. So, bank will do it as per the instruction, but that is not reflected in our cash book. Direct payment into the bank account by a customer. Sometime it happens that our customer or client deposit cash in our bank account. If our customer is from the other state or from other city, so they can deposit cash into our bank account. So, it is also one of the reason for difference. Error committed by the bank. Sometime it happens that due to number of transactions happen in the bank may commit mistake. So, due to this error also sometime it happens that there would be some difference in the balance. Friends, need for bank reconciliation statement, the importance of bank reconciliation statement, why it is required. As I said that 90% transactions generally in business are either related to cash or bank. So, need for bank reconciliation statement, it reflects the actual bank balance position. Sometime it happens that whatever reflected in our cash book, right, on that basis if we take any decisions and if it is not as per the passbook, then we may be in trouble. So, it reflects the actual bank balance position. Reconciliation help to detect any mistake in the cash book and in the passbook also. If we reconcile the transactions recorded in the cash book, transactions recorded in the passbook, we can make out whether there is any mistake or not. It prevents fraud in the recording the banking transaction. In the era of cyber crime, if we reconcile cash book and passbook, we can make out whether any discrepancy due to any fraud happen in the transactions or account. It explains any delay in the collection of check. Sometime it happens that due to some unavoidable reason, if collection of checks are not done properly, not in time, that we can make out from bank reconciliation statement. Very important methods of preparation bank reconciliation statement without adjustment. This is very important, friends, that without adjustment, whatever the reasons behind this discrepancy, differences, that we have to consider. Basically, there are two methods to prepare bank reconciliation statement. Bank reconciliation statement without any adjustment, bank reconciliation statement with adjustment. We emphasize more on without adjustment. Whenever bank reconciliation statement is prepared without making the adjustments for the cash book, the bank reconciliation statement is called bank reconciliation statement without adjustment. Whenever bank reconciliation statement is prepared after making such necessary adjustment for omissions, error in the cash book, it is called a bank reconciliation statement with adjustment. The bank balance is adjusted for the errors. Bank reconciliation statement without adjustment. Friends, the bank balance of a business enterprise may either be favorable or unfavorable. Favorable or unfavorable means debit or credit. When the cash book shows a debit balance of the bank or passbook shows a credit balance, it is known as a favorable balance, wherein the deposits are comparatively more than the withdrawals. So, friends, as per cash book, we know very well that if cash having debit balance means bank column of cash book having debit side more total means it is called debit balance, generally written in credit side. So, which shows favorable balance. When the cash book has a credit balance or the passbook has a debit balance, then it is termed as unfavorable balance. Any ledger account, if it has a credit balance, it means it should be written under liability, means treated as a bank overdraft, which is unfavorable for business. Finding the balance as per cash book or as per passbook is the first step in bank reconciliation. It is the starting point of reconciliation process. Either it is favorable or unfavorable, but bank reconciliation statement must be started with the first line balance as per cash book or balance as per passbook. There are 4 different points for preparing bank reconciliation statement. So, debit balance as per cash book, which is called favorable. See friends, these are the 4 options generally we can starting point for bank reconciliation statement. Whether it is favorable or unfavorable, that is not a big issue, but debit balance as per cash book means favorable. As I said, debit balance means it should be written under assets, and if it is written under assets, it means it is a current asset for the business. Credit balance as per passbook, that is also favorable. It means in the bank passbook, bank side, if we have a credit balance, it means for bank we are the creditors. Credit balance as per cash book, if credit balance, that is unfavorable, because credit balance generally is written under liability, and liability means it is a bank overdraft, which is unfavorable. Debit balance as per passbook, in bank passbook if we have a debit balance means it is also unfavorable. So, friends, either it is favorable or unfavorable, we have to take care of all these things. Friends, when we start to learn bank reconciliation statement, these are the various possibility. In bank reconciliation statement, generally we have to add certain transactions and we have to deduct a certain transaction, but it is always pain in neck as a student to remember this type of transaction. So, that is why we have prepared the summary of such this type of transactions. When reconciliation is started with all this, balance as per cash book, which is called CB, and balance as per passbook, and if it is overdraft, OD. See, cash book having positive effect, cash book having if overdraft reverse effect, passbook having positive effect, passbook overdraft having the reverse effect. I advise you, all these transactions are summarized, but when you are preparing bank reconciliation statement, friends, you should focus on cash book positive and passbook positive side. The reason is overdraft. If you will keep one understanding and rules in your mind regarding cash book balance, then automatically you can treat the reverse or adverse effect of overdraft. So, I never advise student to remember overdraft entry. I advise you that go for bank balance first. So, friends, see, these are the various issues, particulars check is issued but not presented in the bank for payment. So, of course, check is issued but not presented in the bank for payment. So, what it means? It means when we issue check, we have already written in cash book, in a cash book bank column, right, but still it is not presented. So, bank did not reduce the fund. So, friends, when we have issued the check, we have debited bank column, we have reduced in the bank amount, right. So, immediately you have to add it. Vice versa, in a passbook, the reverse entry minus. So, I advise you, okay, go for only one effect. The second effect you can give very easily. Check deposited but not credited by the bank. See, when we have deposited check in the bank, immediately in 3 columnar cash book we have debited to bank account, right. But friends, when we check deposited but not credited by the bank, if it is not credited by the bank, then again we have to deduct it to reconcile. Vice versa, in bank passbook it will be added, right. If we have a passbook bank balance as per bank passbook, then it should be added. But I advise you that go for cash book understanding first, right. Then the passbook entry you can understand very easily. Vice versa for overdraft also. Income directly collected and credited by bank. So, friends, if it is immediately directly collected by bank, but as a cash book we do not know, of course, we have to add to reconcile the amount. Friends, these are not accounting rules, but mathematically, logically we tally the amount, we tally the balances as per cash book, as per passbook. Expenses directly paid and debited by bank. If expenses are directly paid and debited by bank, ultimately bank has reduced the amount, we have to reduce from cash book also. So, minus from cash book, and vice versa, if it is a as per bank passbook, we have to add it. Bills discounted and dishonored. Friends, later on you are going to learn one more chapter in detail, bills of exchange. In bills of exchange, generally A draw a bill to B sign it and return it to A. If A want to dispose of the bill, he can discount it with the bank. So, if such bills are discounted and after the maturity period, if it is dishonored, then bank immediately give the effect. But we do not know that after 3 months whatever bill were presented, that was dishonored. So, to reconcile it, we have to deduct it from our bank cash book. Friends, bank charges debited by bank not entered in cash book. So, charges are debited but not entered in cash book. So, we have to minus it, we have to deduct it, right. Interest credited by bank not entered in cash book, interest credited by bank but not entered. So, in cash book we have to increase the amount of bank balance. So, it is added. So, friend, this is a summary of all the transactions generally happen between the cash book and passbook, but I advise you that always emphasis more on cash book column. If you understand the effect of cash book column, the remaining effect you can give very easily. Friends, after this, the item which will increase the passbook balance more than the cash book, these are the certain items: interest credited by bank not presented for payment, debtors directly deposit into the bank not entered in cash book, check issued but not presented for payment, dividend collected by bank not recorded in cash book, bank charges recorded twice in the cash book. So, these are the certain transactions which increase balance of passbook. The items which decrease the passbook balance, right. So, these are the items. Debit side of the cash book was overcast. If it is overcast by mistake, it will definitely decrease the passbook. Check deposited but not presented for payment. So, we have already deposited, but if it is not presented for payment, of course, it will reduce the amount. dishonored check appeared in the passbook but not entered in cash book. As I said, generally dishonor of bill and dishonor of check having same entry. The direct payment by bank as per standing order has been left in the cash book, etc. Credit side of the cash book was undercast. As I said that if debit side of the cash book was overcast, vice versa credit side. The bank charges are not recorded in the cash book, that is also reduced the balance of cash book. When balance as per passbook favorable is given, when passbook balance is given and we have to find out balance as per cash book, in this case we have to find the impact of each item causing difference in the cash book favorable balance. As I said in the last column, if you understand the cash book column, the remaining columns will become very easy for you. To put in different words, we will have to see whether a particular item increases or decreases the favorable balance of the cash book. The items which will increase the cash book balance more than the passbook should be added. In the sum also we will learn in detail how to add this type of transactions in a bank reconciliation statement. The check deposited but not credited, that we have learnt. The bank charges debited but not recorded in cash book, so that we have to add. The dishonored check appeared in the passbook, that we have to add. The debit side of the cash book was overcast. If debit side is overcast, of course we have to add the same amount. The direct payment by bank as per standing instruction, which is not recorded in a cash book. Which are the items generally we deduct? The items which will decrease the cash book balance more than the passbook. The check issued but not presented for payment, very common. The interest credited by bank but not presented for payment. The dividend collected by bank but not recorded in cash book. The debtors directly deposited into bank but not entered in cash book, and the bank charges recorded twice in the cash book. So, these are the reason behind all this type of transactions. Now, friends, let us understand with one wonderful example, right, that whatever transactions we have discussed, the differences, reasons behind it, but generally how to prepare bank reconciliation statement. From the following particulars, prepare bank reconciliation statement for Sri S. Banerjee at 31st March 2019. Friends, we are given certain transactions, bank balance as per cash book rupees 7,000. When you prepare bank reconciliation statement consists of two columns. Sometimes we add one more column for date also, right. So, in a bank reconciliation statement, friends, generally we have to start either bank balance as per cash book or bank balance as per passbook. So, here we are given in this question bank balance as per cash book rupees 7,000. So, immediately I will write bank balance as per cash book rupees 7,000. Now, friends, remember the summarized transactions. We have to think of bank balance as per cash book, so cash book column only. Logically, also you can get the information whether it should be added or deducted, right. Bank balance as per cash book rupees 7,000. Then number 2, checks issued but not presented for payment up to after 31st rupees 1,000. So, friends, when check issued but not presented for payment, when check issued immediately, we reduce bank amount in our cash book. In a cash book we reduce the bank balance, but wait, check issued but not presented. If it is not presented, see, forget about whether it is presented, paid or not. For us, when we issued it, we debit it, we reduce the amount. Okay, this is the reconciliation. At this stage, if it is not presented for payment, add it. So, in add plus checks issued but not presented rupees 1,000, right, friends. Now, the next is check issued for payment but forgot to enter in cash book rupees 750. this is also very important friends कि check issued for payment but forgot to enter in cash book rupees 750. So when we have issued, actually cash book should be reduced, cash book bank amount should be reduced, but we have forgot to enter. So now we have to enter in cash book rupees 750. So minus check issued but not recorded in cash book 750. So we have to reduce it. Dividend collected directly by bank rupees 1000. If bank has collected 1000, it is not recorded in a cash book. But wait, when bank collected the dividend, the bank amount is increased. So here also we have to add dividend directly collected by bank rupees 1000. A debtors directly made the payment into bank rupees 500. Debtors directly made payment. So as per passbook 500 is increased, but in cash book we don't know. But wait, debit what comes in our bank account 500 comes in. Debit the receiver, credit the giver. Debtors are already giver, right? So debtors are already credited. So here plus debtors directly made payment rupees 500. Check deposited into bank, no entry was made in cash book rupees 1000. Check deposited into bank but no entry was made in cash book rupees 1000. So check deposited into the bank but not recorded in cash book. So we have to record it because it increased the bank balance. So check deposited into the bank but not recorded in cash book, record it now. And the last transaction, bank interest received rupees 150 and bank charges paid 50, not recorded in cash book. So we have to record bank interest rupees 150 will be added. So bank interest received, vice versa 50 rupees which is an expense would be deducted minus 50. So friend, this is a summary of bank reconciliation transactions, right? This type of transactions, right, generally create differences between bank balance as per cash book and bank balance as per passbook. So here after plus or minus of all the transactions, these are the transactions which create the difference. We have given the effect and at the end we will get bank balance as per passbook 9850. So these are the transactions which we have considered the effect. Friends, if it is started as per cash book, it ends with as per passbook. So today we have learned bank reconciliation statement, the basic sum, certain reasons behind the differences of balance as per cash book and passbook. Later on we are going to discuss the details of variety of transactions behind bank reconciliation. So friends, thank you very much for patience listening.